not really. The reason to have gold and silver is to protect yourself from inflation. And by inflation, I mean government spending, central bank printing. That's all going to continue one way or another, even if the Fed is playing hardball right now. The revaluation would change all that and would inflate things even more. Maybe it's Trump's big announcement. Supposedly he's going to make a big announcement before he goes to the Middle East next week. I could be wrong, but who knows?
Gold prices have shown remarkable resilience in recent trading sessions, according to market analyst Mario, turning positive and climbing above the $3,300 mark after experiencing an intraday dip to the $3,274 to $3,275 range. Currently trading at $3,326, gold has gained $21 in a volatile session that saw the precious metal reach a high of $3,330. Silver has demonstrated more modest gains, rising just 6 cents to trade at $32.50, with a daily trading range between $32.20 and $32.58. FXStreet data confirms silver's upward trajectory, reporting a 0.37% increase from Thursday's price of $32.46. The white metal has performed impressively since January, accumulating a 12.76% gain year-to-date. Heightened geopolitical risks drive the strength in precious metals. Mario points to several ongoing conflicts: the Russia-Ukraine war, escalating tensions in the Middle East, and renewed friction along the India-Pakistan border, as key factors driving safe haven demand for gold and providing fundamental support for higher prices. Beyond geopolitical concerns, MarioInnecco emphasizes that the primary reason to hold gold and silver is as a hedge against inflation, which he defines explicitly as government spending and central bank money printing. Despite the Federal Reserve's current restrictive monetary stance, Mario believes these inflationary pressures will persist one way or another over the long term. When inflation rises, the purchasing power of fiat currencies typically declines, prompting investors to seek alternative stores of value. Gold and silver have historically fulfilled this role, becoming increasingly attractive as inflation erodes the worth of paper money. Before we dive into the video, be sure to subscribe to our channel, hit the bell icon to stay updated, and share it with friends who may find it helpful.
I think the gold has been used in the last 50 years not to help the economy or the American public. It's been held there to help Wall Street to keep the price of gold down and to keep the fiat currency Ponzi scheme going. So I think it would totally change things. And of course, this is just speculation on my part, but it could be an easy way for the administration to stimulate the economy, seeing that the Federal Reserve is not wanting to play ball in terms of cutting rates. And I'm also neutral about that. I personally think there shouldn't be a central bank or a Federal Reserve for that matter, but that's a different topic. So that's how gold revaluation would work. Is that the reason why I've been stacking gold for so long? Because I expected something like this? No, not really. The reason to have gold and silver is to protect yourself from inflation. And by inflation, I mean government spending, central bank printing. That's all going to continue one way or another, even if the Fed is playing hardball right now. The revaluation would change all that and would inflate things even more. Maybe it's Trump's big announcement. Supposedly he's going to make a big announcement before he goes to the Middle East next week. I could be wrong, but who knows? So it's 8:02 a.m. You've noticed Clive is not on this Friday because we got the builders coming in and it's going to be too noisy to do the interview. But he will be on Sunday for the live stream. Yeah, so the markets, where are we? Well, yesterday the stock market rallied strongly after Trump said you need to buy stocks, which is weird for markets to react like that. But we'll have to see. Right now, the stock markets are actually unchanged. The futures 8:02 a.m. London, of course. Gold was very volatile again and continues to be volatile. Right now we're up $21 at 33.26. The high's been 30 and the low 32.74. Silver, that's only up 6 cents at 32.50. High's been 58.5 and the low has been 32.20. One thing I noticed yesterday that isn't really healthy for the financial system is that the treasury yields went up quite a bit. Like the 10-year yield was up almost 12 basis points. Right now it's unchanged at 437, and the 30-year was up about 6. It's at 483. Why is that important? Well, because if these yields continue to go higher, it's going to make the cost of financing higher, not just for Uncle Sam, but for Wall Street, for consumers, for everyone. And as we know, we live in a highly financialized and leveraged economy, not just in the US, but in the UK. Yes, the Bank of England cut rates yesterday. They're going to keep inflating here. I've heard that the regulators are going to take out most of the regulations pertaining to taking on a mortgage. So they want another housing boom. They want more inflation. Another reason why things are going to get more and more expensive, and the currency is going to continue to go down. So yeah, keep an eye on treasury yields. And I suspect they went up because Trump was very bullish. He said the economy is going to do great. You need to buy stocks. And at the same time, he wants Powell to cut rates.
The U.S. Treasury's gold reserves present a remarkable financial paradox in today's economy. Officially valued at a decades-old price of $42.22 per ounce, the 261.6 million troy ounces in government possession have a book value of just $11.04 billion. This stands in stark contrast to their current market value of $870.08 billion at today's gold price of $3,326 per ounce, creating an $859.04 billion valuation gap that represents a significant accounting discrepancy on the government's balance sheet. This situation stems from the monetary policy transitions of the 1970s when the United States moved away from the gold standard. Market analyst Mario points to the Federal Reserve's continued holding of gold certificates from this era as a central element of this financial anomaly. These certificates appear on the Fed's balance sheet at just 1.27% of their potential market value, a discrepancy that Mario believes Congress could address through revaluation legislation, similar to previous acts that established gold's official price. The physical distribution of these undervalued assets centers primarily on Fort Knox, according to Fortune's report. This facility houses 147.3 million troy ounces, 56.3% of total U.S. gold reserves, which are worth $489.9 billion at current market rates, but are carried on government books at just $6.22 billion. The remaining gold reserves are distributed across other facilities, including the Denver Mint, West Point Mint, and New York Federal Reserve. Let's get back to the video.
Of course, back in the 70s, the statutory gold price, that's what it's called, $35, it was set in 1934, and it stayed there till 1972, and they revalued it to 38, and then in 73 they revalued it again to the present statutory price, which is $42.22. It's a little more, it's 42.2222. And those gold certificates are still at the Federal Reserve, but they're valued at around $11 billion. So the way it would work now, it would be the same way President Trump, Congress, they would pass something like the Gold Reserve Act. And I think there's legislation about a Bitcoin reserve that I think Senator Loomis put through into Congress. It hasn't been passed, but there's a clause there on page 12, I think, that allows Congress to revalue the price of gold. so that they can buy Bitcoin maybe and other cryptos and other things. So that's how it would work. It would be really easy. And why would President Trump want to do this? It's nothing about free markets, nothing about what I believe in, but the reason we're talking about this is because it's going to affect the gold price, and hopefully you've been stacking gold, or hopefully you're going to think about buying gold. And if you do, don't forget to check out my affiliates in the US. It's Miles Franklin, and in the UK it's Gold Investments. All the details are below in the description. And why would the price of gold go up even more? Because it's been going up a lot since the year 2000. Well, because a revaluation, let's say to $3,000 an ounce, would put a floor on the price of gold, because that's what the government would value gold at. Just like it put a floor on gold in the 70s when they raised the statutory price. It never went back to 42. And at 3,000, that would mean a windfall for the Treasury of around 780 billion or so. So how would that work, that process of the 780 billion? Well, the Treasury would basically write new gold certificates for the Federal Reserve, and the gold would be valued at 780 billion on their balance sheet, minus the 11 billion, the difference between 42.22 and 3,000, and the profit that they make in that transaction, they would put it in the Treasury account at the Fed, and it would be Federal Reserve note 780 billion, and the government could do whatever it wants with that. They could build a sovereign wealth fund, which I don't agree with. I don't think government has any. It's not the government's business to manage the money of a country. It's for each individual to manage his own money, but be as it may, that's what would happen. And I think from what we've been seeing, the Trump administration would invest heavily in natural resources, in extracting, developing mines and other things, Bitcoin as well, even though I don't agree with that either. So that money could be put to work, just like FDR put the windfall from the Gold Reserve Act to work. And it was also, they also created a fund called the Exchange Stabilization Fund with that profit from revaluation. So they, as I said, there is a precedent for a fund. It won't be called the Exchange Stabilization Fund, but it will be called the Sovereign Wealth Fund.
Gold prices have shown resilience amid ongoing geopolitical tensions, with investors turning to the metal as a safe haven asset. Despite intraday volatility, the price remains firmly above key support levels, supported by growing risks related to the Russia-Ukraine war, Middle East instability, and conflicts along the India-Pakistan border. As these uncertainties continue, gold's appeal as a store of value strengthens, reinforcing its role in portfolios during times of heightened global risk. What do you think? Will gold continue to rise amid the current geopolitical tensions? Let me know your thoughts in the comments below. If you found this video helpful, be sure to like, subscribe, and hit the bell icon for more updates. Thanks for watching.